Hey, Bulls and Bears YouTube family, it is Tuesday, January 18th, 2022. Thank you for being here. I really mean that. We've got a lot of news to talk about today. Surging oil, falling stock market, a lot of other economic data, financial news to get into. Let's not waste any time. Real quick though, if you like these updates, please subscribe. It does help our channel grow. And honestly, channels like mine are getting more difficult to show up in the search results with everything else happening in the world right now. So appreciate it. If you like our updates, please subscribe. It does help us out a lot. Let's go ahead and get started here with some news. Start right here. The Dow Jones absolutely crushed, down over 500 points on the fear of rising interest rates. So let's think about this. The market is dependent on never-ending low interest rates, and even the talk or the chatter of rate increases far into the future are causing the market to sell off. So we need higher interest rates. Higher interest rates are good. We need some sort of correction in the markets. We need prices to come down in many different areas, the cost of living in general. But yet, if we do that, then the markets go down. But guess who's going to lose? It's going to be mostly the bottom 90%. Most people that are in the stock market are in their 401k, in their retirement account. And most of those people are passive investors. They're not watching the market every day. They're not sitting in front of their computer day trading. A lot of people are, but most people are just passive investors. The people that are in the stock market are in there passively, with the top 10% owning about 90% of all stocks. As you can imagine, once those people, or that group of people, the top 10%, once they get together, if they decide to sell at once, they could bring down these markets very, very quickly. And without the support of the plunge protection team, for example, you could see the market sell off very, very quickly. And the top 10% of the people at the top, they're going to be in a position to profit from it, because if they all do get together and decide to sell at once, guess what? They're going to have a lot of short positions entered at the same time to take advantage of the drop. While again, most people that are passive investors are going to watch their 401k get zapped. All right, now I'm not saying that's going to happen. I'm just saying it's possible, because the market is controlled by a very small number of people total when you look at it. All right, but just think about the magnitude of those numbers. The bottom 90% only own 10% of all the stock market worth. The bottom 90% own 10%. The top 10% own 90%. So you can see who's making the most money here. Now, a lot of things could happen. The Fed could come out and they could say, oh, we're not going to raise rates as soon as we thought, and you'll probably see the market take off again. And, I'm not here trying to tell you exactly what's going to happen with the market. And I think most of you know why. I'll give you 3 seconds. Because you cannot predict a manipulated market. I can predict that there's going to be manipulation, but whether they're going to take it up or down, left or right, my guess is as good as yours. But I do know the way a lot of people are looking at this is they're looking at it as unlimited inflation. But keep in mind, all good things must come to an end. And what's going to happen to your net worth if the market is allowed to drop? Now, on the same topic of wealth inequality, take a look at this. The world's 10 richest men doubled their wealth in the pandemic, while 99% of incomes dropped. 99% of incomes dropped. That's pretty remarkable. So when they put these statistics out there and they tell you that the average income is rising, what they do is they factor in the very, very mega rich at the top, and they average that into the entire population. So when you factor in the fact that the people at the top doubled their income, the top 10 richest people, and you average that into the overall population, it's going to look like the average income is rising, but really the bottom 99% incomes have dropped, and the top 10 richest people, their income doubled. Pretty remarkable, but nothing too surprising as far as what we've seen over the past few years. Now, on that topic, I want to speak to some of the people here that think this is about one party or another. You're out there, you're talking about Brandon. You're saying, oh, we wish we had 45 back, the 45 regime. It was all the same game, essentially, from a financial perspective. Keep interest rates low, keep increasing the debt, market propping, market support, deregulation for the banks. Not much different as far as keeping the economy and the markets propped up. And as far as the two parties go, left, right, doesn't matter. They're all making a lot of money trading on inside information and trading off policies that they themselves put in and vote for to further enrich themselves. And that's why you actually see the lawmakers that are actually part of the top 10% in most cases when you look at net worth. All right, let's talk about the price of oil. This is absolutely stunning, the rise lately that we've seen in oil. Will it stop? Will it go back up to $100 plus per barrel? Let's take a look at a chart right here. And this is year to date. And we see it above $86 now per barrel. Now let's look at a long-term chart. We did see this huge spike back in 2008. So it hit $124 a barrel in July 2008. I remember that time because I had bought a vehicle at that time and nobody wanted 6 cylinders or 8 cylinders. Everybody wanted 4 cylinders. And it was actually that same summer, I believe it was June or July, when it hit the peak. And at that time, you could go into a dealer and you could get just really good deals on 6 cylinders and 8 cylinders because nobody wanted them. People were afraid. People didn't know if prices were going to keep going up. Of course, it ended up being a good time to buy because oil prices dropped pretty big after that. But I ended up getting a 6-cylinder Honda Pilot, kind of medium-sized vehicle. Now people are scooping up 6 cylinders, 8 cylinders. People don't seem to care, even though oil prices are rising pretty rapidly. So what's going to happen when oil prices continue to rise? Less interest in these bigger vehicles? Or because of the chip shortage, because of the vehicle shortage, we're still going to see heavy demand in all types of vehicles? Well, it's looking like it might be just that. It could be this double-edged sword where oil prices go up, gas prices surge, but because of the chip shortage, lack of manufacturing here in the States, you're going to see the double whammy of higher fuel costs and vehicle prices remaining high. And that's pretty scary to think about how people are going to handle this rising cost. How you're going to get to working back when gas prices are double and people are still buying these overpriced vehicles. They could go up even higher. It's pretty scary times. Pretty unprecedented times that we're in right now. And the scary part is, where does it end? And it's pretty big news here. Oil prices at a 7-year high. I'm going to wrap it up here, make this a very short one today. Keep on preparing and getting yourself ready because we're looking at some really, really tough times ahead of us here. For those that are already living on the edge financially or on thin ice financially, it's about ready to get worse. So hold on to your wallets, people. Stay prepared. Keep stacking. Bye for now, everybody. Big love. Peace.